Tupperware. This stock has gone up over 556% in the past month. The stock has gone from 67 cents all the way up to over $5 a share in 1 month. So in today's video, we are going to be talking about should you buy this stock and what's going on with Tupperware. So I hope you guys will enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe. If you guys are new to the channel, new to the team, we talk about everything money, stocks, money management, trading, investing, credit cards. So subscribe, join the team. So let's jump into it. I hope you guys enjoy it. So like I said, Tupperware stock has literally gone from 67 cents all the way up to over $5 a share, up over 556%. So what is going on? Why is this thing moving so much? So it all starts actually a couple months ago, all the way back in April. During this time, Tupperware company actually came out and stated that the company is going out of business. Anytime something like this happens, investors sell their shares, and that's what we saw. The stock literally went from $15 all the way down to 67 cents. And the reason why people sell this stock is because the company's going out of business. When people invest into the market, they're trying to make money. But there is a way that you can make money from a stock selling off. This is what you call shorting a stock. So how this works is very, very simple. If you wanted to bet against Tupperware, what you do is you borrow shares from your broker, hoping you can buy them back at a lower price. And during this time of all the sell-off, everybody was happy. The people that were shorting the stock were making money hand over fist because the company's going out of business. But the issue is if the stock value goes up, there is no max stop loss. Compared to when you buy a stock, if you bought Tupperware stock at $1, the worst that can happen is it goes to zero and you're out $1. The issue is when you short a stock at $1 and it goes to $4, $5, $10, you can lose a lot more money. And that's kind of what we saw happen, is the stock slowly started to creep up. Now this is because of something called a short squeeze. Now when the stock value goes up, the people that were shorting the stock get scared, they get nervous, so they have to buy back those shares. Now what happens when you buy the stock? The share value goes up. So it's this domino effect with all those people that were shorting the stock got nervous, got scared, and the stock skyrocketed. And that's what you call a short squeeze. And we saw this with the more popular one, GameStop, where the stock has literally gone from $2, $3 all the way up to over $500 a share. And we saw it among other companies like Bed Bath & Beyond, AMC, and these so-called meme stocks is what Reddit calls them. So in simple terms, that's what's going on. Now let's talk about should you buy this company. So for me, I definitely think looking back at history tends to repeat itself. Looking back at the one and only GameStop, the stock skyrocketed up, but just as fast as that stock went up, it sold off. And that's what happened. A lot of people got burned. A lot of people lost a lot of money with it. So for me, answering that question of should you buy this company, I think it's incredibly risky when you invest into these short squeezes, because you never know when that ticking time bomb is gonna sell off. It could sell off tomorrow, or it could sell off in 1 month. You never know. It's definitely a high risk, high reward play. But as far as like a long-term investment, I think you guys know the answer. It's absolutely not. Looking at some of these fundamentals, they're terrible, negative net profit margin. They're losing money hand over fist. So I'm not investing in it for the long run. But now as a day trade or a swing trade, I think that's where you could make your money. It's incredibly risky. And if you're a beginner, I would not recommend trading these types of companies because they're very, very risky and you can lose a lot of money. But if you want to have fun and you want to buy a couple of shares, I do it. I think it's always fun keeping it under 1 or even 0.5% of your portfolio. So if this thing squeezes up all the way up to $500, you can make a decent amount of money. When I invest into these types of companies, I imagine just throwing my money into the garbage. It's 100% gone and I'm not emotionally attached to this money. It's all very, very incredibly risky and I'm well aware of that. So honestly, that's kind of what's going on with this company, answering that question of should you buy it. This is obviously all my opinion, so do your own research before you guys invest, and we'll see you guys tomorrow in the next one.